Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about my theory around why the stock market is rallying even though the Federal Reserve just announced that they're going to be raising rates. Now, this may seem counterintuitive, but it's really just simple game theory, and that should make more sense as we progress through the video. So let's do exactly that. To kick it off, we will catch up on what the announcement itself consisted of and go over some specifics of this rate hike. To do that, we will be reading over the CNBC article titled "Federal Reserve Approves First Interest Rate Hike in More Than 3 Years, Sees 6 More Ahead." After we read through this bad boy, go over some key points here. I do want to dive into the SPY or the S&P 500 on the charts, what I believe best sums up the U.S. equity markets, and take a look at how the SPY reacted over the course of the day that this announcement was made. Now, just to preface this, you guys, I am recording this on the day this was made, on the day this announcement was made, which is Wednesday, March 16th. So we'll talk over this. We'll we'll cover how the market kicked off the day, how it progressed through the day, what actually happened once the announcement was made, and what happened, of course, after the announcement was made, because it's all very interesting. And it all really the culmination of this video, and I say game theory, but really the specifics of this game theory can really be summed up into a single one-liner, and that one-liner is the FOMC meeting today was a textbook example of buy the hype and sell the news. This is a quote that many of you are going to be familiar with. We've said it many times here on the channel, but I mean, it's a cliche because it's true, and it still rings true. It will ring true for, the remaining history of as long as the financial markets are around, because there will always be game theory in effect, especially when there's so much emotion and so much irrational behavior present in the markets, like there has been. Primarily, I guess you could say speculation in the markets, maybe a better word, like there has been over the past few weeks, even couple months now, okay, with everything going on from a macroeconomic perspective, from a geopolitical perspective. No one really knows what's going on, and therefore there's a lot of speculation afoot because the macro environment is so uncertain. But as far as the FOMC meeting itself was concerned, this was very, very expected. Okay, so before we get into the specifics, and we'll actually close out the video by talking through what happened over the course of the day and kind of my thoughts personally as we progress through the trading day. I do want to read the intro to the newsletter this morning, to the newsletter that I sent out this morning, because I actually wrote this immediately after the announcement was made. You can see that right now on CNBC, Hong Kong's Hang Seng Index soars nearly 5%, Japan's Nikkei up 3%. So by the time you guys are watching this, which is Thursday 17th, maybe even the 18th, Friday, I'm going to assume that the remainder of this week is going to be pretty bullish. If Hong Kong is looking good tomorrow, Alibaba, Tencent, we're up like 25-30% today, just because of some relief out of Beijing, or Beijing, Shanghai. Please correct me on that. But China pretty much just guaranteed that they will keep the equity market safe, and it's very, very unlikely that they will be delisted from foreign markets, okay, which sent Alibaba, Tencent, again, big players, skyrocketing, and that is carrying into the following day. Therefore, once again, by the time you guys are watching this, let me know in the comments down below, is the market green? You guys eating good? Because I absolutely hope so. And again, the SPY, the triple Qs, the NASDAQ up 3.7% today, bouncing huge. ARK, this is a massive position, my biggest position in my portfolio right now, just for full transparency. And ARK was up over 10%, double digits, which is absolutely amazing to see, and feels good. So we're back to the races, right? So let's read through this, and then we'll go over some of the specifics of the rate hikes themselves, and then just close it out talking through the day on the charts, all right? So, boom, that was the one-liner right there. Stocks are seeing a bit of a shock-driven sell-off. This is right here again. Remember, I was writing this right here. Stocks are seeing a bit of a shock-driven sell-off immediately following the announcement, but I have no idea why. Little sarcasm. This is the exact outcome that every reputable economist has been expecting. So if this is a shocker to anyone, you're simply uninformed. I stand by my thesis that the closing of this meeting will ultimately be treated as a looming event scratched off the forward-looking calendar, and it's more likely than not that the market sees some short-term relief as opposed to further downside. Although the Fed will be hiking interest rates, inflation is still running blazing hot. and it's realistically going to take a long time to cool down. It's arguable, that the hikes they penciled in today are even going to make much of a dent, but hey, time will tell, I guess. It's actually funny watching my watch list go bonkers. Again, writing this at the time, like while this was happening right here, everything was fluctuating. There was so much volume pumping, which is crazy to watch, but very fun to watch at the same time, and ultimately very validating once everyone came to their senses, right? And again, talk about this more. But funny watching the watch list go bonkers. On the screen beside me as I write this, investors are really trying to figure out how to play this one. There's a lot of speculation and confusion in the air. Always do your best to stay cool and think rationally when the kitchen gets hot. And that's everyone who thought rationally when this happened, when the bounce happened, when the relief rally, or I mean, not even the relief rally, when that the full-on reversal following the panic happened. Those who thought rationally and those who kept a cool head, let me shout out to you guys. I'm very proud of how I played this one personally. Those who kept a cool head and stuck to their game plan and stuck to their macro beliefs and fundamental beliefs, which of course, if you had a wrong fundamental beliefs, if you thought that it actually would tank, then that's your fault, but I don't want to fault you for that. But regardless, the game plan today, if you guys have been tuned into the channel, if you guys watched my previous video where I talked about the FOMC meeting and how I thought it would impact the market specifically that I released a few days back, then you know that this has been in the cards for so long, right? Like, we've been expecting this for so long. If you guys have been part of the newsletter even, so shout out to the newsletter, you guys. Before we go further, I'm sorry, I got to plug it. I will be gone. I'm leaving tonight for Vegas, going to attend the first NFT gated arts and music festival by my friends over at the after party and live minting my Utopian. Follow me on IG at Royce Jacob, not the newsletter plug, but a little Instagram plug. Follow me on Instagram at Royce Jacob if you guys want to follow that, because I'm actually really excited. If you're interested in NFTs, go check that out. But if you guys want all of the videos that I'm going to be recording over the coming week, the week I'm gone, I will be making those private to the portfolio newsletter. And on top of those, obviously, you get a complete breakdown of my entire personal portfolio, which I do update every single trading day during market hours, which obviously I'm going to be updating and staying in. Staying very disciplined on, and obviously I'm going to be trading. It's not only for myself, it's of course for you guys, and it's more so for you guys, the paying subscribers. So doing that every trading day, again, along with a complete breakdown of my entire personal portfolio. You also get the daily newsletter. This is the intro. This is part 2. We go on to cover a whole bunch of charts in part 2 as well. So if you guys want my daily take over what I believe is going to be a pretty damn exciting week, that's going to be the first link down in the description. $15 a month or $40 for every 3 months. Appreciate it if you check it out, but if not, no worries at all. Let's keep ripping on on this analysis. Okay, so let's read through this, you guys, go over some key points. Sorry, I've been putting it off, and then we'll close it out over here on the charts. Okay, so key points: the Fed approved a 0.25 percentage point rate hike, the first increase since December of 2018. Officials indicated an aggressive path ahead, with rate rises coming at the end of each of the remaining 6 meetings in 2022. Members also paired expectations for economic growth this year and sharply raised their outlook for inflation. The Federal Reserve on Wednesday approved its first interest rate hike increase in more than 3 years, an incremental salvo, never seen that word before, whatever, let me know what that is down below, to address spiraling inflation without torpedoing economic growth. After keeping its benchmark interest rate anchored near zero since the beginning of the COVID pandemic, the Policymaking Federal Open Market Committee, or FOMC, said it will raise rates by a quarter percentage point or 25 basis points. That will bring the rate now into a range of 0.25 to 0.5%. The move will correspond with a hike in the prime rate and immediately send financing costs higher for many forms of consumer borrowing and credit. Fed officials indicated the rate increases will come with slower economic growth this year. Okay, so again, what I really want to round this back to, you guys, is the game theory of this, right? And the fact that the markets knew this was coming. All of the big money in the markets, who realistically, now that so many retail investors have unfortunately been washed out and cleaned out of the markets, all of the big money involved in the markets knew that it was virtually 100% likely that Jerome Powell, the Fed, the FOMC, was going to come in and hike interest rates today. Now, what people weren't absolutely certain about, but were pretty convinced of, just given all the macroeconomic geopolitical factors, was that six to eight interest rate hikes over the course of the entire year of 2022 was in the cards, right? And it's pretty much like, unless the Federal Reserve came in saying we're going to hike interest rates a guaranteed 8 to 10 times, 0.5% each time, which would be pretty unprecedented. And that obviously did not happen. Unless something like that happened, unless a crazy, black swan event, a bunch of black swans came out of the Fed's mouths, it's pretty likely that the worst case scenario has been priced in. And again, this is what we've been saying for the past week or so now, since we've all been keeping an eye out for this FOMC meeting, and since again, the looming event on all of investors' calendars that was this FOMC meeting has been on the horizon. The markets have been tanking, you guys. The past week has been awful. Again, Friday and Monday of this week, Friday of last week were cataclysmic, right? And that was the markets pricing in the rate hikes, because obviously the Russia-Ukraine situation is not helping the markets at all. On the contrary, even though we did make that stocks do love war video a while back, which they kind of do, and it's looking like that they are making a little progress. I guess that kind of helped the markets a little bit today, but ultimately, you guys, I think it is just, as I said right here, a looming event checked off the calendar. This is something investors were scared of that is now that they now do not have to worry about, and therefore that brings more certainty and more optimism to a once pessimistic and scared market. Okay, so let's close out, you guys. Talk over what happened today on the charts. And again, you guys, this was yesterday, but the main reason I want to go over this is just kind of just playing the psychology and playing the game theory out, at least in my head personally, and how I was dictating this over the course of the day. Okay, so we gapped up as soon as the market opened, right? This came from that might have again come from progress in the Russia-Ukraine situation, but ultimately it's because this is the day the Fed's coming, and this is the day rate hikes are probably going to come. So up over the course of the day, I think we were up the spot was up as much as 1.5% over the course of the day. And then boom, midday, once the Fed actually announced that they were going to be raising rates in their forward-looking statements, which again, everything they said was almost exactly in line with what every single reputable economist was saying that they would do. Therefore, again, the big money, the market makers, the hedge funds, the institutions knew this was going to happen. And what I think happened actually was, once they hiked rates, the institutions triggered a bear trap. So all the big money tried to sell off, scare retail, scare a lot of other players in the market. And again, there is also a triple witching this Friday, which is where options contracts expire. There's a lot of other expiries happening on 3/18. So this panicked a lot of people right here, that initial sell-off. I think a lot of big money was, again, just bear trapping a lot of the market. Market sold off a little bit, but once we came to our senses, this sell-off only lasted for about half an hour, 45 minutes, because we're on 5-minute candles right now. Once the market came to its senses and saw that reversal, and of course, once this previous lower high is broken, we were off to the races. And this is just a good example, you guys, of buy the hype, sell the news. I wish I was composing this better. It sounded better in my head when I was kind of rehearsing it in my head prior to recording this, so I'm sorry about that. I'm kind of just spitting out my random thoughts. But again, you guys, I do think this was a little bear trap, catalyzed by some of the market makers, by the big money, to scare off retail into selling. And once we saw that low, saw that reversal, is back to the races. And then obviously the FOMO's kicking in, especially after this high was broken. FOMO's kicking in, and as we closed out the day, everyone's realizing, shit, the markets are back, baby. Like this, if the markets are coming back this hard following the announcement, then there's nothing to be afraid of. And that's really what I want to round this back to, is that so much of this was priced in. And we'll just close it out with the fact that this was priced in, and we called it, you guys. Okay, so let's hope that the rest of this week is strong. I'm feeling very confident in the portfolio right now, and I'm feeling very confident that the comeback of at least the year, maybe not the decade, because we probably have more of those to come, but comeback of the year is upon us. And again, if you guys wanna join me in the journey over the next week at least, and hey, however long you want, go check it out, you guys. It's only $15 a month. I feel like it's extremely worth it, but I'm also very biased, so go check it out. If you don't like it, just unsubscribe. It's that easy. But again, it's greatly appreciated if you guys do, and I look forward to the week ahead. Cheers to what's hopefully a very significant and cheers-worthy comeback. All right, so I'll catch you guys downstairs in the comments. Talk about whatever you guys want, and I'll catch you probably when I'm back home, unless you're part of the newsletter, and I'll see ya in a couple of days, or in the morning, in the newsletter at least, okay? So, catch you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace.